Based on the provided data for Bitcoin, a long-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a consistent upward trend, with the recent price surge exceeding previous highs. The forecast price also projects continued growth over the next week, further supporting this bullish outlook. Therefore, I recommend entering a long position at the current price of $97,200. To manage risk, set a stop-loss order at $91,968.57, the identified support price, to limit potential losses. The target price should be set at $101,000, considering the recent price action and the forecast projection. This strategy capitalizes on the expected upward momentum of Bitcoin while implementing risk management measures to protect the investment. Based on the provided price information for Bitcoin Cash, a short-term investment strategy appears to be the most suitable approach. The 2-week price change demonstrates a volatile trend, with fluctuations both upwards and downwards. However, the 1-week forecast suggests a downward trajectory, indicating a potential for profit from a short position. The current price is relatively close to the resistance level, suggesting that a correction downwards is possible. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price of around $516. A stop-loss order should be placed at $580 to limit potential losses in case the price unexpectedly moves upwards. The target price for this short position could be set at $490, aligning with the support price and offering a potential profit margin. This strategy capitalizes on the anticipated short-term decline in Bitcoin Cash's price, while managing risk through a defined stop-loss order. Based on the provided information for stacks, a short-term investment strategy appears to be the most suitable. The 2-week price change shows a mixed trend, with recent fluctuations indicating potential volatility. However, the 1-week price forecast suggests a downward movement, with prices potentially dropping from the current level. This bearish outlook in the short term makes a short position more appealing. To execute this strategy, an entry price of $2.35 could be considered, aligning with the current price range and the forecasted downward trend. A stop-loss order should be placed at $2.42, slightly above the current price, to limit potential losses if the price unexpectedly moves upwards. The target price could be set at $2.20, aiming to capture a potential decline towards the support price. This strategy capitalizes on the anticipated short-term price drop while managing risk through a defined stop-loss. Based on the provided Ethereum price information, a medium-term investment strategy appears to be the most suitable. The historical price data reveals a general upward trend, with recent fluctuations suggesting consolidation. While the forecast predicts a slight decline in the short term, the long-term trend remains positive. This suggests that a medium-term approach allows for capturing potential upside while mitigating short-term volatility. Considering this, an investment strategy could involve entering a long position at the current market price, which is around $3,710. The stop-loss should be placed at $3,620 to limit potential losses if the price drops below the recent support level. The target price could be set at $4,000, aiming to capitalize on the historical price highs and the positive long-term forecast. This strategy allows for a balanced approach, taking advantage of the positive long-term trend while managing risk through a well-defined stop-loss. Given the Ripple price history and the provided forecast, a medium-term investment strategy appears most suitable. The historical price data shows a fluctuating trend with both upward and downward movements. While the forecast suggests a continued upward trend over the next week, the recent price dip and proximity to the support price indicate potential for consolidation or a short-term pullback before further growth. Therefore, a long position is recommended for a medium-term investment horizon. The entry price should be around $2.37, slightly above the recent low and close to the support price. This allows for a margin of safety while capturing potential upside. The stop-loss should be set at $2.25, below the recent swing low, to minimize risk. The target price can be set at $2.60, aligning with the resistance level and representing a healthy profit margin. This strategy allows for capturing the potential upward momentum while managing risk through a well-defined stop loss and a realistic target price. Based on the provided Binance Coin price history and forecast, a short-term investment strategy appears most suitable. The historical prices show a fluctuating trend with recent upward momentum, suggesting potential for further short-term gains. The forecast, however, indicates a slight downward correction in the coming week, presenting an opportunity to capitalize on this potential dip. Therefore, an aggressive short-term strategy would involve opening a long position at the current price around $688, with a stop loss set slightly below the recent support price of $659.60. This stop loss would protect against any unexpected upward surge. The target price would be set at $750.11, the resistance level, aiming to capture the potential price increase before the predicted downward correction. This strategy leverages the current upward momentum while anticipating a short-term dip, aiming to maximize returns within a relatively short time frame. Based on the provided price history and forecast for Stellar, a cautious investment strategy leaning towards the short term is recommended. The historical prices demonstrate a fluctuating trend, with recent movements suggesting potential consolidation or a minor downward correction. The forecast further supports this notion, projecting a decline in price over the next week. Considering this, a short position on Stellar appears to be a more suitable approach. An entry price around $0.490, slightly above the current price and close to the resistance level, would allow for capturing potential downward momentum. A stop loss should be placed at $0.5027, the resistance level, to minimize potential losses if the price unexpectedly surges. The target price can be set at $0.433, a significant support level, aiming to capture a substantial portion of the anticipated price decline. This strategy allows for capitalizing on the short-term bearish outlook while managing risk effectively. Given the price trends and forecast for Toncoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a volatile trend with recent fluctuations. The forecast indicates a downward trend in the coming weeks, suggesting potential for price decline. The support price at $5.574 provides a potential floor for the price, while the resistance at $6.80 acts as an upper limit. Therefore, a short position is advisable to capitalize on the anticipated price decrease. An entry price of $6 would allow for a decent margin of profit before reaching the support level. The stop loss should be set at $6.37, slightly above the recent high, to protect against any unexpected price surges. The target price should be set at $5.60, aiming for a profit before the price potentially finds support. This strategy allows for a measured approach to capitalize on the predicted price movement while minimizing potential losses. Given the price trends and forecast for Cardano, a short-term investment strategy focused on a long position appears promising. The historical prices demonstrate an overall upward trend, with recent fluctuations suggesting consolidation. The forecast indicates a potential increase towards $1.15, aligning with the historical price movements. The support price at $0.3579 suggests a strong foundation for further upward movement. Therefore, a suitable investment strategy would involve entering a long position at the current price, around $1.02, with a stop loss set slightly below the recent low of $1 to protect against unexpected price drops. The target price could be set at $1.15, aligning with the forecast high, allowing for potential profits while minimizing risk. This strategy capitalizes on the short-term bullish momentum of Cardano, aiming to profit from the anticipated price increase towards the forecast high. Given the provided historical price data and the forecast for Litecoin, a cautious investment strategy focusing on the short to medium term appears most suitable. While the historical price shows an upward trend, the recent 2-week price change indicates a decline, with the forecast suggesting continued downward pressure. The current price is near the support level of $99.37, suggesting a potential for a temporary bounce. However, the resistance level of $136.06 is significantly higher, indicating a challenging climb for Litecoin in the short term. Therefore, a conservative approach would involve entering a short position near the current price, around $110. The stop loss should be set slightly above the recent high of $136.06 to minimize the risk of a sudden upward reversal. The target price could be set around $99.37, aiming to capitalize on the potential for a decline towards the support level. This strategy allows for potential profits from the anticipated price correction while managing risk through a well-defined stop loss. Holding this position for a few weeks to a month would align with a short to medium-term investment perspective, allowing for a reasonable timeframe to assess the price action and adjust the strategy accordingly. Based on the provided information for Sway Coin, a short-term investment strategy appears most suitable. The historical price data demonstrates a recent upward trend, reaching a peak of $4.26 before experiencing a slight pullback. The forecast price suggests continued upward momentum, with prices projected to rise towards $3.97 in the coming week. This upward trajectory aligns with the current price position near the support level of $3.6979, indicating a strong foundation for potential growth. Therefore, a long position is recommended for this strategy. An entry price around $3.85 would allow for capitalizing on the anticipated price increase towards the forecast of $3.97. A stop loss at $3.70 would safeguard against unexpected downward movements, while a target price of $4.10 would allow for capturing significant profits if the price continues its upward trend and approaches the resistance level of $4.261. Given the price trends and forecast for Aptos, a cautious investment strategy would focus on a short-term approach. The historical prices show a recent upward trend, but the forecast indicates a potential pullback in the coming week. The current price is near the resistance level of $14.68, suggesting that the upward momentum might be weakening. The support price at $10.38 provides a safety net for potential price declines. Therefore, a short-term short position is recommended. An entry price of $14.30 would allow you to capitalize on a potential price decline towards the support level. The stop loss should be set at $14.70 to limit potential losses if the price unexpectedly rises. The target price should be set at $11.50, aiming to capture a significant portion of the potential downside movement while avoiding excessive risk. This strategy allows for potential profit from the anticipated pullback while mitigating the risk of a sustained price increase. Based on the provided price history and forecast for SAY, a cautious investment strategy is recommended. The recent price trend shows a downward trajectory, with the forecast indicating further declines. The historical price data suggests a potential support level around $0.3513, while the resistance sits at $0.7055. Considering this, a short position appears to be the most suitable approach to capitalize on the anticipated price decrease. An entry price of $0.675 could be considered, aligning with the current price and allowing for potential profit as the price moves towards the forecast lows. A stop-loss order should be placed at 69 cents, slightly above the entry price, to limit potential losses in case of an unexpected upward price movement. The target price could be set at 58 cents, a conservative level that allows for profit-taking before reaching the potential support level. This strategy prioritizes risk management while aiming to capture potential gains from the anticipated downward price movement. Based on the provided Ethereum Classic price information, a cautious investment strategy focusing on the short term appears most suitable. The historical prices demonstrate a recent decline, with the forecast indicating further downward movement. While the support price at $28.40 provides a potential floor, the predicted price drops below this level, suggesting a higher probability of continued decline. Therefore, adopting a short position at the entry price of $31, aligning with the current market price and the forecast, would be prudent. Setting a stop loss at $32 safeguards against unexpected price surges. The target price should be set at $29, capitalizing on the anticipated price decrease while leaving room for market fluctuations. This strategy allows for potential profit from the predicted decline in Ethereum Classic while minimizing risk. Based on the provided Polygon price data, the historical price trend suggests a period of consolidation and potential upward movement. While the recent 2-week price change shows some volatility, the forecast indicates a slight upward trajectory over the next week. The price is currently hovering near the support level, making it a potentially attractive entry point for a long position. Considering the historical price data, forecast, and support/resistance levels, a suitable investment strategy for Polygon would be to adopt a long position with a medium-term investment perspective. An entry price around $0.585 could be considered, with a stop loss set at $0.576 to minimize potential losses. The target price could be set at $0.661, aligning with the highest forecast price, allowing for a healthy profit margin. This strategy capitalizes on the potential for Polygon to move upwards towards its resistance level while mitigating risk through a well-defined stop loss. Based on the provided price information for AEVO, a cautious investment strategy is recommended. The 2-week price history shows a volatile trend with both upward and downward movements. While the forecast suggests a potential decline in the coming week, the price history demonstrates resilience, bouncing back from significant dips. Therefore, a short-term investment perspective is advised, aiming to capitalize on short-term fluctuations. Considering the forecast, support price, and resistance price, a long position is suggested with an entry price near $0.468. The stop loss should be placed slightly below the support price at approximately $0.429, minimizing potential losses. The target price can be set around $0.533, aligning with the highest projected price in the forecast. This strategy allows for potential profit from a short-term price increase while mitigating risk with a well-defined stop loss. Given the price trends and forecast for optimism, a cautious investment strategy would focus on a short-term approach, considering the recent price fluctuations and the downward forecast. The historical prices show a mixed trend, with a recent dip towards the end of the 2-week period. The forecast suggests optimism might continue to decline, reaching prices as low as $2.19. While the support price is at $1.816, indicating a potential floor, the risk of further downward movement outweighs the potential for a quick rebound. Therefore, a short position is advisable to capitalize on the anticipated decline. For this strategy, an entry price of $2.40 would allow you to enter the trade near the current price while accounting for potential fluctuations. A stop loss at $2.48 would protect against unexpected upward movement, and a target price of $2.15 would allow you to secure profits before reaching the support level. This strategy aims to minimize risk while maximizing potential returns in the short term, capitalizing on the predicted downward trend in optimism's price. Based on the provided historical price data and forecast for STRK, a cautious medium-term investment strategy appears most suitable. The historical prices demonstrate a volatile trend, with recent fluctuations suggesting uncertainty in the short term. The forecast, while indicating a slight downward trajectory, also suggests potential for short-term rebounds. Given this mixed outlook, a medium-term approach allows for navigating these fluctuations and capitalizing on potential price reversals. An entry price around $0.625, slightly above the recent lows and below the current price, would provide a good entry point. The stop loss should be set at $0.618, slightly below the support price, to minimize potential losses. The target price could be set at 71 cents, aligning with the recent highs and potential for upward movement within the medium term. This strategy aims to capitalize on the potential for STRK to retrace towards its recent highs while managing risk through a well-defined stop loss. Given the price trends and forecast for Solana, a cautious investment strategy would focus on a short-term approach to minimize potential losses. The historical prices show a consistent downward trend, with the current price hovering near its lowest point in the recent period. The forecast indicates further declines, suggesting Solana might continue to drop towards the support level. The support price is significantly lower than the current price, indicating a high risk of further price drops. In this scenario, a short position is advisable to capitalize on the potential for a price decrease. A suitable entry price for a short position would be around $229, aligning with the current price and the forecast's downward trajectory. The stop loss should be set at $237, slightly above the current price, to protect against any unexpected price surges. The target price should be set at $216, which is the lowest point predicted in the forecast, allowing you to take profits before the price potentially rebounds. This strategy aims to capitalize on the anticipated decline in price while mitigating potential losses through a well-defined stop loss. Based on the provided price information for Jupiter, a cautious investment strategy focusing on the short term appears most suitable. The 2-week price history demonstrates volatility, with recent fluctuations suggesting a potential for further short-term price movements. The forecast price indicates a downward trend over the next week, aligning with the recent price decline. While the support price provides a potential floor, the resistance level is relatively distant, suggesting limited upward potential in the near term. Therefore, an investment strategy should involve a short position with an entry price around $1.10. This entry point allows for capturing potential downside movement while minimizing risk exposure. A stop loss should be set at $1.15 to protect against any unexpected price surges. The target price could be set at 95 cents, aiming to capitalize on the downward forecast and aligning with the support price, which could act as a strong buying point for a potential future rebound. This strategy prioritizes risk management while aiming to profit from the anticipated short-term price decline. Based on the provided price information for Render, a short-term investment strategy appears to be the most suitable. The historical price data shows a recent upward trend, reaching a peak of $10, but then experiencing a slight correction. The forecast price suggests a continuation of this upward trend, albeit at a slightly slower pace. The support price sits at $8.549, providing a safety net for potential price dips. Therefore, a long position is recommended to capitalize on the anticipated price increase. An entry price of $8.80 would allow for buying into the current price action while leaving room for potential upside. The stop loss should be set at $8.60 to limit potential losses in case the price drops unexpectedly. The target price could be set at $9.40, aligning with the forecast price and allowing for a healthy profit margin. This strategy leverages the short-term bullish momentum of Render while managing risk through a well-defined stop-loss order. Given the price trends and forecast for Solana name service, a short-term investment strategy focusing on a long position appears promising. The historical price data demonstrates a general upward trend, with recent fluctuations suggesting potential for further growth. The forecast predicts continued price increases, further supporting a long position. The current price is close to its support level, indicating a potential buying opportunity. Therefore, an aggressive investment strategy would involve entering a long position at the current price of around $0.298. The stop loss should be placed at $0.2893, the support price, to minimize potential losses. The target price could be set at $0.345, aligning with the highest forecasted price, allowing for a reasonable profit margin. This strategy capitalizes on the anticipated upward momentum of Solana name service in the short term. Based on the provided price information for Doge-Coin, a medium-term investment strategy appears to be the most suitable. While the recent price history shows some volatility, the forecast suggests a gradual upward trend. The historical prices demonstrate a range-bound movement with support at $0.36588 and resistance at $0.4081. The forecast prices indicate a potential rise towards the resistance level, presenting an opportunity for profit. Therefore, an investment strategy involving a long position in Doge-Coin is recommended. The entry price should be set at $0.400, slightly below the current price, allowing for a buffer against potential short-term fluctuations. The stop loss should be placed at $0.390 to limit potential losses. The target price should be set at $0.450, aiming to capitalize on the forecast upward trend. This strategy allows for a balanced approach, capturing potential gains while mitigating risk through a well-defined stop loss. Based on the provided PEPE price information, a short-term investment strategy appears to be the most suitable. The historical price data shows a volatile but generally upward trend, with recent fluctuations around the $0.000220 mark. The forecast price suggests continued upward momentum, reaching a peak of $0.000279 in the coming week. However, the resistance price of $0.000265 indicates a potential ceiling for this upward movement. Therefore, a long position could be considered for a short-term investment. An entry price around $0.000230, close to the current price and below the resistance, would allow for potential profit if the price reaches the forecast target of $0.000270. A stop-loss order set at $0.000210 would help mitigate risk in case the price drops unexpectedly. A target price of $0.000260, just below the resistance level, would allow for a significant profit while avoiding potential price reversals. This strategy capitalizes on the expected upward trend while managing risk through a well-defined stop loss and a conservative target price. Given the current price trend and forecast for SHIB, a cautious investment strategy with a short-term perspective is recommended. The historical price data shows a volatile pattern, with recent fluctuations indicating uncertainty in the short term. The forecast suggests a slight decline in price over the next week, with prices potentially falling below the current level. Therefore, a short position would be advisable to capitalize on this potential downward movement. A suitable entry price would be around $0.000275, slightly above the current support price, allowing for some margin of safety. The stop loss should be set at $0.000280 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.000265, aiming to capture a modest profit from the anticipated price decline. This strategy emphasizes risk management and aims to capitalize on short-term price fluctuations while minimizing potential losses. Given the provided price information for Doge-Coin, a cautious investment strategy focusing on the short term would be prudent. The 2-week price change shows a degree of volatility, with the forecast indicating a potential decline in the coming week. While the historical prices have experienced both upward and downward movements, the recent trend suggests a potential for a short-term correction. Therefore, entering a short position appears to be the more suitable approach in this scenario. An entry price of $3 could be considered, aligning with the resistance level and allowing for a potential profit if the price moves towards the support price of $2.75. A stop-loss order could be set at $3.10 to limit potential losses if the price unexpectedly rises. The target price should be set at $2.80, offering a reasonable profit margin while avoiding overly aggressive targets. This strategy prioritizes risk management and capital preservation in the short term, aiming to capitalize on the potential price decline while mitigating potential losses. Given the price history and forecast for Doge-Coin, a short-term investment strategy focusing on a short position appears most suitable. The 2-week price change shows a downward trend, and the forecast predicts further declines. The current price is near the resistance level of $0.007764, suggesting a potential for a pullback. Entering a short position at the current price of $0.00757 allows you to capitalize on this anticipated decline. To manage risk effectively, a stop-loss order should be placed at $0.007764, the resistance level, to limit potential losses if the price unexpectedly rises. The target price should be set at $0.006893, the support level, aiming to capture the full potential of the predicted downward movement. This strategy capitalizes on the bearish outlook and aims to generate profits from the anticipated price decline in the short term. Based on the provided price information for NEAR protocol, a cautious short-term investment strategy is recommended. The 2-week price change shows a volatile trend with a recent downward movement, aligning with the forecast which predicts further declines in the coming week. The support price at $6.138 indicates a potential floor for the price, while the resistance at $6.918 suggests an immediate upward barrier. Given this context, a short position appears more suitable to capitalize on the anticipated price decrease. An entry price of $6.65, slightly above the current price and below the resistance, allows for a potential profit margin. A stop loss should be set at $6.90, above the entry price and below the resistance, to limit potential losses. The target price is set at $6.15, slightly above the support price, aiming to capture a significant portion of the anticipated decline. This strategy prioritizes risk management by setting a stop loss while aiming for a moderate return within a short time frame. Based on the historical price data and the provided forecast for Internet Computer, a cautious investment strategy with a medium-term perspective appears most suitable. The historical prices demonstrate a fluctuating trend, with recent dips indicating potential volatility. The forecast suggests a slight decline in the coming week, followed by a potential recovery. This suggests a period of consolidation before a possible upward movement. Therefore, a long position is recommended, aiming to capitalize on the anticipated recovery. An entry price around $12.50 would allow you to enter the market after a potential dip, with a stop loss set at $11.60 to minimize risk. The target price could be set at $14, aligning with the historical high and the potential for an upward movement. This strategy balances risk and reward, taking advantage of the potential for growth while mitigating potential losses. Given the provided price history and forecast for Injective, a cautious investment strategy would focus on a short-term approach. The historical price data shows a fluctuating trend with no clear upward or downward momentum. The forecast indicates a slight decline in the coming week, suggesting a potential for short-term profit. Therefore, a short position is advisable to capitalize on the anticipated price decrease. An aggressive short-term investment strategy could involve entering a short position at $30, the current price. The stop loss should be set at $31, slightly above the current price, to protect against any unexpected price surges. The target price could be set at $27, aligning with the lowest forecasted price, allowing for potential profit before the market hits the support level. This strategy leverages the short-term bearish outlook presented by the forecast while managing risk with a well-defined stop loss. Based on the provided information for BTC, a short-term investment strategy appears to be the most suitable approach. The recent 2-week price change demonstrates a volatile trend, with a peak at $712 and a subsequent decline to $575. The forecast predicts a further decrease in price over the coming week, reaching as low as $563. This downward trend, coupled with the price already being near the support level of $520.50, suggests a potential for continued downward movement. Therefore, a short position is recommended. An aggressive entry price of $596, aligning with the recent price action and near the resistance level of $596.70, allows for potential profit from a further decline. The stop loss should be set at $605, slightly above the entry price, to mitigate risk in case of an unexpected price surge. The target price is set at $520.50, the support level, aiming to capture a significant portion of the potential downward movement. This short-term strategy capitalizes on the prevailing bearish sentiment and aims to generate profits from the anticipated price decline. The current price trend for THETA network is mixed. While the 2-week price change shows some volatility, the forecast suggests a potential decline in the coming week. Considering the forecast, a short-term bearish strategy appears to be more appropriate. An entry price of $2.75, aligned with the forecast, would allow for a short position. To manage risk, a stop loss should be set at $2.84, slightly above the current price and the entry point, to minimize potential losses. The target price should be set at $2.48, the lowest price in the recent history, to capitalize on the anticipated downward movement. This strategy aims to profit from the expected price decline in THETA network over the short term. It prioritizes risk management by setting a stop loss above the entry price and a target price below the current support level. The short-term nature of this strategy allows for quick gains if the forecast proves accurate, while the stop-loss mechanism helps mitigate potential losses. Based on the provided price information for WorldCoin, a short-term bearish investment strategy appears to be the most suitable. The 2-week price change shows a fluctuating trend with a slight downward bias. The forecast price suggests a continued decline over the next week, reaching as low as $2.77. This bearish outlook is further supported by the current price being relatively close to the resistance level of $2.948, indicating a potential for a price pullback. Therefore, a short position on WorldCoin is recommended. An entry price of $2.90, slightly above the current price, allows for some buffer against immediate market fluctuations. The stop loss should be set at $3 to limit potential losses if the price unexpectedly rises. The target price could be set at $2.75, aligning with the forecasted lowest price and offering a reasonable profit margin. This strategy capitalizes on the anticipated short-term price decline while managing risk through a well-defined stop loss. Given the price trends and forecast for Hooked Protocol, a short-term investment strategy appears to be the most suitable approach. The historical prices show a fluctuating pattern with recent declines, and the forecast predicts further downward movement in the coming week. While the support price is relatively low at $0.4376, the resistance level at $0.6859 suggests limited upside potential in the near term. Therefore, a short position is recommended to capitalize on the anticipated price decline. An ideal entry price would be around $0.625, aligning with the recent price action and the forecast. The stop loss should be set slightly above the entry price at 64 cents to minimize potential losses in case of an unexpected price surge. The target price could be set at 55 cents, anticipating a moderate decline towards the support level. This strategy aims to capture short-term profit from the predicted downward movement in Hooked Protocol's price. Given the provided price data for Artificial Superintelligence Alliance, the historical prices show a volatile trend with both upward and downward movements. The 2-week price change indicates a decline, while the 1-week forecast suggests a continued downward trend. Considering the support price at $1.679 and the resistance price at $1.93, there is a possibility for the price to find support around the current levels. Based on this analysis, a short-term investment strategy with a short position appears to be more suitable. An entry price of $1.80 would allow you to capitalize on the potential for a price decline towards the support level. The stop loss should be set at $1.88 to limit potential losses if the price unexpectedly rises. The target price could be set at $1.68, aiming to capture a significant portion of the anticipated price drop. This strategy takes advantage of the bearish outlook indicated by the price forecast while mitigating risk through a well-defined stop-loss order. Polkadot exhibits a fluctuating price trend over the past 2 weeks, with recent highs around $10 and lows dipping below $8.40. The forecast suggests a potential pullback in the near term, with prices projected to decline from $9.77 to $8.89 within the next week. Given this outlook, a short-term bearish strategy appears more suitable. Therefore, I recommend a short position on Polkadot, aiming to capitalize on the predicted price decline. A conservative entry price would be around $9.50, allowing for some margin above the current market price. The stop loss should be placed at $9.80 to limit potential losses if the price unexpectedly rises. The target price would be set at $8.70, aiming to capture a portion of the anticipated downward movement. This strategy leverages the short-term forecast and aims for a calculated profit within a relatively short time frame. Given the Filecoin price history and forecast, a short-term investment strategy appears most suitable. The recent price action shows a slight upward trend, but the forecast predicts a dip in the coming week. This suggests a potential opportunity to capitalize on a short-term price correction. Therefore, a short position is recommended with an entry price around $7.20, slightly above the current price and below the resistance level. The stop loss should be placed at $7.60 to protect against unexpected upward movements. The target price could be set at $6.50, aiming to capture a potential price decline towards the support level. This strategy aims to profit from the short-term price fluctuations while managing risk through a well-defined stop-loss order. Given the price trends and forecast for conflux, a cautious investment strategy would focus on a short-term approach to navigate the potential volatility. The historical prices show a fluctuating pattern, with recent declines suggesting a potential consolidation phase. The forecast indicates a slight upward movement in the coming week, but it remains within a relatively narrow range. Considering these factors, a long position could be considered, aiming to capitalize on the potential for a short-term price increase towards the resistance level. However, it's crucial to manage risk effectively. A conservative entry price of $0.205 aligns with the recent price action and the forecast's lower end. The stop loss should be set at $0.198 to limit potential losses in case of a price reversal. The target price could be set at $0.227, aiming to capture a portion of the potential upward movement indicated by the forecast. This strategy prioritizes capital preservation while seeking modest gains in the short term. Based on the provided Ethereum name service price history and forecast, a short-term investment strategy focusing on a long position appears to be the most suitable. The historical price data reveals a generally upward trend, with recent fluctuations around the $40 to $42 range. While the forecast indicates a slight pullback in the coming week, the overall trajectory remains positive. Therefore, an entry price of $41 would be appropriate, aligning with the current price and the forecast's anticipated dip. A stop loss of $39.50 would protect against significant downside risk, while a target price of $43 would capitalize on the potential for price appreciation towards the resistance level. This strategy allows for participation in the upward trend while managing risk effectively. Based on the avalanche price history and the provided forecast, an aggressive investment strategy suggests a short-term approach focusing on a long position. The historical prices demonstrate an upward trend, with the current price hovering near the support level of $43.74 and the forecast indicating potential for further growth towards $50. The resistance level at $54 suggests there is room for upward movement. Therefore, a long position is recommended to capitalize on this potential price increase. An entry price of $45, aligning with the recent price action, would be suitable. The stop loss should be placed at $43.74, just below the support level, to protect against any unexpected downward movement. The target price should be set at $50, aligning with the forecast and allowing for a reasonable profit margin. This strategy capitalizes on the bullish momentum while managing risk through a well-defined stop loss. DeFi's recent price history shows volatility, with fluctuations between $0.0417 and $0.076. The forecast predicts a slight upward trend, ranging from $0.0613 to $0.0625. While the support price is relatively low at $0.02329, the resistance price of $0.06794 suggests limited upside potential in the short term. Given these factors, a conservative investment strategy for DeFi would involve a long position with a medium-term perspective. An ideal entry price would be around $0.0615, slightly below the predicted forecast, allowing for potential upside as DeFi moves towards the resistance level. A stop-loss order could be placed at $0.058 to mitigate risk in case the price drops unexpectedly. The target price should be set at $0.067, aiming to capture potential gains as DeFi approaches the resistance level. This strategy balances risk and reward, capitalizing on the predicted upward trend while safeguarding against potential downside movements. Given the price trends and forecast for PENDLE, a cautious investment strategy would focus on a medium-term approach. The historical prices show a fluctuating pattern with both upward and downward movements. While the forecast suggests a slight decline in the coming weeks, the support price of $5.678 provides a potential floor for the price. This indicates a sideways to slightly bearish outlook in the short term. Therefore, a short position could be considered for a medium-term investment strategy. An entry price around $5.85, slightly above the current price, would allow you to capitalize on any potential downward movement. The stop loss should be set at $5.924, the resistance level, to limit potential losses. The target price could be set at $5.678, the support price, aiming to capture a moderate profit from the anticipated decline. This strategy allows you to participate in the potential downside while mitigating risk with a well-defined stop loss. Based on the provided the sandbox price history and forecast, a medium-term investment strategy appears most suitable. While the recent price action has shown volatility, the forecast indicates a potential upward trend in the coming weeks. The historical data reveals a strong support level at $0.3772, suggesting a floor for the price. This, coupled with the forecast price reaching 83 cents in the near term, presents a compelling opportunity for investors seeking moderate returns within a timeframe of several weeks. Therefore, a long position on the sandbox is recommended. An entry price around $0.735, aligning with the current price and the dip after the recent peak, would be prudent. The stop loss should be placed at $0.699, slightly below the recent lows, to minimize potential losses. The target price can be set at 83 cents, aligning with the highest forecast price, allowing for a potential profit of approximately $12%. This strategy balances risk and reward, capitalizing on the anticipated upward momentum while safeguarding against significant downside movement. Given the price history and forecast for Decentraland, a short-term investment strategy appears to be the most prudent approach. The historical price data reveals a fluctuating trend with recent peaks around $0.771 and a subsequent decline towards 60 cents. While the forecast predicts a potential rebound to $0.696, it also indicates a downward trajectory in the following weeks, suggesting a possible short-term opportunity. A long position might be tempting due to the forecast's initial increase, but the subsequent decline raises concerns about a potential retracement. Therefore, a short-term short position is recommended. An entry price around $0.695, aligning with the recent high and the initial forecast peak, would be suitable. The stop loss should be placed at $0.739, slightly above the recent high and the resistance level, to minimize potential losses from an unexpected price surge. The target price could be set at 60 cents, aligning with the recent lows and the predicted downward trend. This strategy aims to capitalize on the potential short-term price decline while managing risk through a well-defined stop loss. Remember, this is a speculative short-term strategy and should be approached with caution. Based on the provided price information for ENG coin, a short-term bearish investment strategy appears to be the most suitable. The 2-week price change shows a downward trend, and the forecast predicts further declines in the coming week. While the support price sits at $0.1651, the current price is significantly above this level, indicating a potential for a price drop towards the support level. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price, with a stop loss set slightly above the current price to protect against unexpected price surges. The target price should be set around the support level of $0.1651, allowing for potential profit from the anticipated price decline. This strategy capitalizes on the bearish outlook indicated by the price history and forecast, aiming to profit from the potential downward movement of ENG coin. Given the price trends and forecast for Uniswap, a short-term investment strategy appears to be the most suitable approach. The historical prices show a recent upward trend, but the forecast indicates a slight pullback in the coming week. The current price is relatively close to the resistance level of $15.654, suggesting that a short-term correction might be imminent. Therefore, a short position on Uniswap is recommended. An entry price of $15.60 would allow you to capitalize on a potential price decline towards the support level of $15.093. The stop loss should be set at $15.70 to limit potential losses if the price unexpectedly rises. The target price could be set at $14.90, aiming to capture a significant portion of the potential downward movement. This strategy leverages the short-term forecast and aims to profit from a temporary price correction. Given the price trends and forecast for Chainlink, a medium-term investment strategy focusing on a long position appears promising. The historical prices show a consistent upward trajectory, with a recent surge to $26. This positive momentum aligns with the forecast, which predicts prices to remain stable around $23 to $24 in the coming weeks. While the resistance level at $26.33 might present a temporary hurdle, the strong support at $14.88 suggests a robust foundation for further growth. Therefore, an investment strategy involving a long position in Chainlink is recommended. A suitable entry price would be around $24, aligning with the forecast and providing a margin of safety below the recent high. A stop loss at $22, slightly below the support level, would protect against significant downside risks. The target price could be set at $27, aiming to capitalize on the potential for Chainlink to break through the resistance level and reach new highs. This medium-term approach allows for potential growth while mitigating risks through a well-defined stop-loss strategy. Given the price trends and forecast for Aave, an aggressive investment strategy would focus on a medium-term approach to capitalize on the anticipated upward momentum. The historical prices demonstrate a general upward trend, with the current price hovering near the support level of $255.78. The forecast suggests Aave could rise towards $285, while the resistance level sits at $283.03. This indicates a bullish outlook in the medium term, making a long position the most suitable strategy to capitalize on the potential for a price increase. To execute this strategy, an entry price of $260 would be ideal, allowing you to buy in before the price reaches its resistance level. The stop loss should be set at $255, protecting your downside in case of an unexpected price reversal. The target price should be set at $280, allowing you to take profits before the price reaches the resistance level, ensuring you lock in gains before a potential pullback. This medium-term approach allows you to benefit from the anticipated price increase while managing risk effectively. Based on the provided price history and forecast for EOS, a medium-term investment strategy appears most suitable. The historical price data shows EOS has experienced both upward and downward movements, suggesting volatility. The forecast indicates a slight upward trend over the next week, but the price remains below its recent highs. This suggests a potential for further growth, but also a risk of consolidation or a pullback. Therefore, a long position is recommended with an entry price around $1.10, aligning with the forecast and providing room for potential price appreciation. The stop loss should be set at $1.05, below the recent support level, to mitigate risk. The target price can be set at $1.30, aiming to capture a significant portion of the potential upside while staying below the recent resistance level. This strategy balances risk and reward, allowing for potential profits while minimizing potential losses in the medium term. Given the provided price history and forecast for Tron, a cautious medium-term investment strategy appears most suitable. The historical price data reveals a volatile trend, with significant fluctuations both upwards and downwards. While the recent price has experienced a decline, the forecast suggests a potential upward correction in the coming weeks. The support price of $0.262 acts as a potential floor for the price, while the resistance at $0.3244 presents an immediate hurdle for further gains. Therefore, a long position on Tron is recommended for a medium-term investment horizon. An entry price around $0.275 could be considered, allowing for a buffer above the support price while capturing potential upside momentum. The stop loss should be set at $0.262 to minimize potential losses if the price drops below support. The target price could be set at $0.318, aiming to profit from the forecast price increase while avoiding excessive risk. This strategy balances potential reward with risk mitigation, capitalizing on the potential for Tron's price to rebound while protecting against significant downside movements. The provided data for Suncoin suggests a potential for short-term gains. While the recent price action has shown some volatility, the historical data reveals an overall upward trend. The forecast predicts a slight dip followed by a gradual increase, aligning with the support and resistance levels. Considering this outlook, a long position in Suncoin appears to be a suitable strategy. An entry price around $0.0240, slightly below the current price, allows for a margin of safety while still capturing potential upside. The stop loss should be set at $0.02346, the support level, to minimize potential losses. The target price could be set at $0.0277, the highest predicted price in the forecast, aiming to capitalize on the anticipated upward movement. This strategy positions the investor to benefit from the potential short-term price appreciation of Suncoin while managing risk effectively.